Hey everyone, welcome back to my channel and Happy New Year from Taiwan. This is episode number 1 of a brand new season, and in today's video, I'm going to give you a quick portfolio recap on how my high yield income portfolio did in 2025. So in this video, I'll start off with a brief overview of the portfolio performance, and then I'll talk about my newest position that I just added this week, and then I'll share some details of my 2026 plan. Now, if you're new to my channel, I use high yield income ETFs in my Roth IRA account. So let me show you what's in my Roth IRA right now. My core holding is SCHB, my income ETF is HOOW, and my newest holding is QDTE. And I'll talk a little bit more about this later on in the video. Now, some of you might be thinking, why are you putting high yield dividend ETFs in a Roth IRA account? Well, the biggest reason for me is I live overseas and I don't always make enough US earned income. So I have a problem with contributing money to my Roth IRA account because you can't put foreign income in a Roth IRA. You also can't put dividend income or gift money in a Roth IRA account. So, with the money that I have already in the account, I'm using that to buy high yield ETFs, and then I'm using the high yield ETFs to generate income in order to buy more shares of core holdings like SCHB. So that's the main reason why I have high yield income ETFs. Now, this is part of my three-pillar plan in my Roth IRA. I'm targeting somewhere between $200,000 and $300,000. I know it's not 500K or $1 million. I think for most people, it's unrealistic to try to reach that target, especially if you're like me and you're starting the Roth IRA a little bit later in life, or you just don't have a lot of extra income to put inside of a Roth IRA. But I think with high yield dividend ETFs, and a core holding like SCHB, I think it's possible to reach 2 to 300K in the next 10 to 15 years, but we'll see. And this is in combination from distributions and dividends from my taxable brokerage account and hopefully Social Security. Okay, so that's enough of the overview. Let's get into the core part of the video, which is how did my portfolio do in 2025? So looking at this chart from my brokerage account, Schwab, you can see that from January to March, a bit of decline. This is when I had some yield max funds, and they were making a lot of income, and it was really great to see. But they just couldn't keep up with the NAV decay. So I made a small pivot, and I bought some XDTE around March and a little bit more in April. And you can see that from March to July, it's doing pretty good. It's doing what it's supposed to do. It's not a high yielder, but it has some NAV control during this period. So I was really happy with the performance of XDTE. Now, in August, there was a lot of talk about other income vehicles, especially leverage ETFs from Roundhill Investments. And so I sold out of XDTE, added some HOOW, and that proved to be probably the most profitable decision I made in 2025. Because if you look at August to October, I mean, I'm making so much money. My portfolio even touched 20K in October. Now, around this time, I was getting a little bit, I don't know if anxious is the right word, but HOW had made a lot of capital appreciation, something like $4,000 in just 2 months. I'm not talking about dividends, I'm talking about capital appreciation. So I thought maybe I should take a little bit of risk off the table. And that, with a little bit of luck, actually sold before the big liquidation event on October 10th. And I didn't know that was going to happen. So it was a little bit lucky for me to do so. Now, around this time, I thought, okay, I'm de risking, but I still want to be in the market. And I purchased some YETH and WPay, and you can see previous videos of my experience with those two funds. But I mean, you can see from October to November, my portfolio is going downhill from there. I mean, I saw my portfolio reach over 20,000 for a couple hours, and then from October, it just never reached those same highs again. But these funds aren't the only ones to blame. I mean, there was a lot of market volatility during that time, government shutdown, macroeconomics, and more stuff. So probably a lot of people didn't have a lot of fun during this time. Now, around November, when the government shutdown was on pause, it looked like some stuff was recovering. So I entered a small position in HOW around $54, thinking that that was a good price. And then it actually dipped down to 48. So HOW is right now going somewhere between 48 and $53, it seems. So I don't know what's going to happen in the next 2 months, but I'm still going to hold it because the position is still quite small. Okay, so looking at my portfolio in a little bit more detail, you can see that at the beginning of December, my portfolio value is around $17,500, which is a little bit of a dip because remember, I did touch over 20K between October and November. If we look at some more details, you can see that the distribution or dividend income was about $5,500. And to me, that's pretty good because my first goal for 2025 for this portfolio was to generate at least $400 a month. So $400 times 12 is $4,800. I reached my goal in 2025. So I'm really happy with that. So, like I said earlier, HOW is in a range right now. I haven't seen it break over 55 yet. So until it does that, I'm going to be in a little bit of a loss right now. But it's still a paper loss, and I'm still collecting dividends. So let's see what happens in the next 2 months. Now, at the end of December or at the end of 2025, my portfolio hits $18,200, which is more than the start. So I'm really happy. I'm a little bit bummed that it didn't hit over 20K like I wanted to, but that's the market. Sometimes you can't win every play or every month. Now, if we look at my income summary, you can see that it's all over the place. From January to March is when I had the yield max funds. And then from April to August, that's when I had XDTE. And then September, October, that's when I had HOW. So the income really reflects the positions that I held. December, not a bad month, $600, not as high as September, October, but still pretty good. Okay, so let's talk about my newest position, QDTE. And I know a lot of people have talked about this in the past. It seems like ages ago because there's all these new income funds in the market these days. Okay, so QDTE, I think that some people, when you see all these new income funds, at first glance, they might think, oh, newer is better. And I mean, I'm part of that because I went into WPay thinking new fund, probably they learned from, past mistakes, and it should be way better than XCTE and QDTE and so on and so forth. But actually, I think some of these funds, the ones that run covered called option plays on index funds, actually might be a little bit safer than the concentrated or single ticker ones that you'll see from Yield Max, even Roundhill and RecShare. So that's one reason why I thought enter a small position into QDT. And it's still a weekly payer. It still pays somewhere between 15 and 30 cents every week. So I think that's a pretty good distribution, especially for what I'm trying to do in my Roth IRA. Now, if we look at why QDTE is a choice for me, well, looking at this graph, if I compare this with some, other popular funds in the market, you can see that in blue is QDTE, orange is TDAC, and purple is QQQI. And in the last 6 months in total return, QDTE is beating both of them. And these are really good funds. Now, if we look a little bit closer, you can see that in the past 6 months, 1 month return, TDAC and QQQI is down. They are better funds for NAV control, but in terms of generating income and a balance of NAV control, I think QDTE is a good option for investors like me. Now, 6 months return, QDT is still beating, and year to date, still beating. Now, TDAC, I think, has a lot of promise. It just hasn't been out that long, but we'll see what happens in the next 6 months. Now, just for fun, I added another fund, Maggie, because I know it's sort of a newer fund that's a more curated or concentrated look at the Mag 7. And you can see here, it's supposed to be a little bit more diversified, but because it's concentrated, it's down more than TDAC and QQQI, whereas QDTE is running option plays on a whole index. So I think QDTE is a little bit safer right now than Maggie. Okay, so looking at the distributions, and I plan in future videos to release more payment schedules of RDTE, QDTE, and XDTE. But for now, let's look at my holding QDTE. It's paying about 15 cents per share this Friday, and it's not a big distribution. Usually it's over 20 cents, but in the last two distributions, Round Hill really paid out a lot of money because they have to at the end of the year. So am I happy with this distribution? I would say that I'm not unhappy. I know that they have to raise the NAV a little bit, and we just got two big payment, the last 2 weeks. Well, not me, but other investors. So it's understandable why this distribution is a little bit lower. And you can see last year, same thing. It was about 16 or 17 cents. So not a big deal for this week. Okay, so let's finish the video by briefly talking about my 2026 plan. So right now I have 70 shares of QDTE and I want to build it up to 150 shares. And after I build up a full position in QDTE, I'm going to use the distributions and dividends from HOW and QDTE. Only use 50% of that and invest it in SCHB. The other 50%, I'm going to put it into cash. Many analysts and investors are thinking that the first half of 2026 might be choppy and we might see a 15 to 20% correction. I don't know how accurate that is, but I do want to have some cash on the side to take advantage of some of those dips. And I sort of alluded to this earlier, but I plan to release a video every Wednesday to give you a portfolio update of how my high yield dividend ETFs are doing in my Roth IRA. And every Wednesday, I'll also tell you some payment information that Roundhill will release Wednesday morning about what QDTE, RDTE, and XET will pay this Friday or coming Friday. So pay attention for those Wednesday videos. Okay, so that was episode number 1 of season 2 for my Roth IRA series. I just wanted to make a really quick portfolio update because I know I've been sort of in and out of YouTube the last 2 weeks, but I'm hoping to be a lot more consistent and try to put out 2 to 3 videos out every week. I'm starting that with my Roth IRA series, so make sure you stay tuned every Wednesday. And again, thank you very much for watching this video. Please like this video and subscribe to watch more free content on achieving financial freedom and living in a And as always, this video is for entertainment purposes only. It is not intended as financial advice. Consult with a qualified financial advisor before making any investment decisions. See you in the next video. Peace.